Pass your life plus health exam with 90% or higher. Question 1. Which of the following best describes the entire contract provision? The policy, along with any riders and a copy of the application, constitutes the entire agreement between the parties. The agent's verbal promises are part of the contract. The policy owner can change the contract at any time. The medical exam results. The entire contract provision states that no outside documents or verbal statements are part of the legal agreement. Question 2. What is the grace period designed to prevent? Overpayment of premiums. Unintentional policy lapse due to a late premium payment. The agent from losing commission. The insured from filing a claim. The grace period gives the insured extra time, usually 30 to 31 days, to pay an overdue premium before the policy cancels. Question 3. If an insured commits suicide 3 years after purchasing a life insurance policy, what will the insurer pay? Nothing. A refund of premiums only. The full death benefit. Half the death benefit. The suicide clause usually lasts for 2 years. After 2 years, the policy pays the full death benefit even if the cause of death is suicide. Question 4. Which type of receipt provides immediate coverage from the date of application or medical exam, provided the applicant is found to be insurable at standard rates? Binding receipt, conditional receipt, inspection receipt, approval receipt. A conditional receipt makes coverage effective immediately if the applicant is subsequently approved by underwriting. Question 5. What is the purpose of the Medical Information Bureau, MIB? To share medical data among insurers to prevent fraud and concealment, to approve or deny applications, to conduct medical exams, to sell medical equipment. The MIB acts as a clearinghouse for underwriting information to alert insurers of potential inaccuracies in applications. Question 6. Who assumes the risk in a participating, mutual, life insurance policy? The stockholders, the policyholders, the agent, the state. Mutual companies are owned by the policyholders, who receive non-taxable dividends as a return of excess premium. Question 7. What feature of an annuity protects the annuitant against outliving their money? The accumulation phase, the death benefit, the guaranteed lifetime income stream, the surrender charge. Annuities are designed to liquidate an estate and provide a lifetime income that the annuitant cannot outlive. Question 8. In a whole life policy, when does the cash value generally equal the face amount, (endow)? At age 65, at age 100, after 20 years, at the insured's death. Standard whole life policies are designed so that the cash value grows to equal the death benefit at age 100. Question 9. What happens under the automatic premium loan APL provision? The bank pays the premium. The insurer automatically borrows from the policy's cash value to pay an overdue premium and prevent lapse. The policy is converted to term insurance. The insured must take out a personal loan. APL uses available cash value to keep the policy in force if the insured forgets to pay the premium by the end of the grace period. Question 10. Which rider provides an additional death benefit if the insured dies strictly as a result of an accident? Cost of living rider, guaranteed insurability rider, accidental death benefit rider, double indemnity, return of premium rider. This rider typically doubles the death benefit if death is caused by a covered accident within 90 days of the injury. Question 11. Which concept requires the insured to suffer a financial loss upon the death of the insured individual? Indemnity, insurable interest, subrogation, utmost good faith. Insurable interest means the policy owner would suffer a financial or emotional loss if the insured died. Question 12. What is the minimum age to sign a legally binding insurance contract in most states? 15, 18, 21, 25. Most states consider 18 the age of majority for entering into legal contracts, including insurance. Question 13. What type of authority is specifically written in the agent's contract with the insurer? Implied authority, apparent authority, express authority, assumed authority. Express authority is explicitly stated in the agency contract. Question 14. If an agent gives a client a brochure that states a policy covers something it actually does not, what type of authority is the agent exercising? Express, implied, apparent, fiduciary. Apparent authority occurs when an agent's actions or materials lead the client to reasonably believe the agent has authority they don't actually possess. Question 15. Which law protects consumers' privacy and requires insurers to notify them if an investigative report is being ordered? The Patriot Act, the Affordable Care Act, the Fair Credit Reporting Act, FCRA, the McCarran-Ferguson Act. The FCRA requires disclosure and protects consumers regarding credit and investigative reports used in underwriting. Question 16. In health insurance, what is coinsurance? The flat fee paid for a doctor's visit. The portion of expenses the insured must pay before the insurer pays anything. A percentage of medical expenses shared between the insurer and insured. The monthly cost of the policy. Coinsurance is the percentage sharing of costs, example 80% insurer/20% insured, after the deductible is paid. Question 17. What is a probationary period in a health insurance policy? A waiting period before the policy becomes effective for specific illnesses or pre-existing conditions. The time the agent is on trial. The grace period for premiums. The time to file a claim. The probationary period protects the insurer against adverse selection by delaying coverage for sickness, usually 15 to 30 days. Question 18. What is a key characteristic of a guaranteed renewable health policy? The premium can never increase. The insurer must renew the policy, but can raise premiums by class. The policy cannot be renewed. The insurer can cancel at any time. Guaranteed renewable means the policy cannot be cancelled, but premiums can be raised for an entire class of insureds. Question 19. Under the ACA, Obamacare, what is the maximum age a dependent child can stay on their parents' health insurance? 21, 24, 26, 30. The Affordable Care Act allows dependents to remain on their parents' health plan until they turn 26. Question 20. What is the primary factor that determines the cost of a life insurance policy? The agent's commission, mortality, interest, and expense. The state of residence. The beneficiary's age. Life insurance premiums are calculated based on mortality risk, expected interest earnings, and company operating expenses.